Welcome back. Even as the markets, broader markets are facing pressure, one stock which has been doing extremely well over the last few months has been Ethos. In fact, just the last 3-month up move will tell you the kind of strength that this stock has seen. Up nearly 50% in the last 3 months. Yes, down about 4.5% today. But this is a play on India's luxury market. Consumption sells premium and high-end watches through 60 stores. And importantly, recently also forayed into the high-end travel luggage and jewelry category. Very recently, we had the trade agreement that was signed by India with the European Free Trade Zone, a trade and economic partnership agreement which will eliminate 22% duty over 7 annual installments between India and Europe, which includes Switzerland. And MK says that this move would improve margins for Ethos. We are joined by the founder and CMD Yashovardhan Saboo to detail this development and speak about demand at large. Thanks a lot, Mr. Saboo, for joining in. Always a pleasure speaking with you. This one's taken some time for you to come speak with the media. But, just wanted to speak about this India-Switzerland duty reduction itself. What is the timeline, the glide path, and are you going to reduce prices for consumers? How will the split of this be between you and the brand?
So thanks. I'm delighted to be here again. This FTA is, of course, a landmark, and it's something that we in the industry have been sort of awaiting for some time. And it's great that it has happened. I don't think there's going to be something dramatic in the short term, but over a long term, I think it's going to strengthen the business very considerably, the business of Swiss watches or mechanical watches or luxury watches in India. The duties, they're currently about 23%, and they will go down to 0 in 7 equal installments once it starts. What will this do? The 23% duty was among the highest in the world, and yet the final prices were sort of comparable. What this is going to do is that it's going to strengthen the measures that we will take. First of all, it will bring prices, margins in India pretty much in line with international norms, which also means that the brands and retail together will have the ability to invest to grow the market, to grow the service levels, to grow the retail experience, and which in turn will actually lead to the growth in the market, which we have been waiting for. The markets are now at a mature level or getting to be mature, and we believe that the growth in India should accelerate as a result of a fantastic change like this.
Okay. So, Mr. Saboo, while this would impact your medium-term business, I think the impact would be directly on your gross margins as well as your margins. What is the anticipated improvement that you expect?
Well, in the sense that, first of all, this is a long-term thing, right? So it's and we have agreements or contracts with most of the brands in place. So I don't think there's going to be an immediate short-term impact. But as I said, over time, as the duty impact gets to be felt, it will correct margins. Currently, as I said, margins in India are among the lowest in the world. So this will correct to international norms and enable us to invest in marketing, to invest in store experience, to invest in service, to give really a world-class performance. And obviously, it will improve the overall margin as well. How much it will improve, in what time frame, I think this depends on how it's going to be implemented over the coming years.
That's exactly what I wanted to understand. Now with the duty reduction over the next 7 years, what is your plan with that 23%? Is it going to be shared with the brand and you 50-50? And will consumers also see lower pricing? In what proportion? Just trying to understand that.
So I don't think there's a general fit-all answer. A lot of things will be discussed with the brand, will be negotiated with the brand. It depends a little bit on the strategy of the brand, how much they want to invest in India, how much they want the retailer to invest. So these are all sort of bilateral agreements that will happen with brands. What I do know is that between the brand and the retailer, we will find the ways to invest more and to accelerate the growth. And of course, to improve the margins, both for the brand as well as the retailer. Exactly how the split will take place, I think this will depend brand on brand.
Multiple scenarios, MK, a brokerage, has believed that at least 200 basis points, there would be an improvement in the margins. At most, it could be around 550 basis points. Would that be a fair range?
Again, as I said, it's a little bit too early to say that. Will there be an improvement? Yes, there will be an improvement. Will it be measurable over, I think, over 3 or 4 years? Yes, we should start to see that. The needle will move on the margin. I don't know whether MK's assessment is completely correct or not. I don't want to comment on that. But yes, in the medium term, in 3 to 4 years, we should see an improvement in margin and overall in the operating margin as well as the vendor margins or the gross margins that we see.
All right, let's talk a little bit about demand then, Mr. Saboo, because last quarter you lost around 10 days because of Shraddh as well as, lower sales. Are you seeing that demand come through this quarter?
Look, I think there has been an acceleration and the undercurrent of demand has accelerated over the last 8 to 10 quarters. And we're not seeing a massive change in that. So, people have been talking that, the markets are going to soften and so on and whatever. We are still seeing a demand which is robust. We are in line with the guidance that we've given, and we are very confident about growth in the next year as well.
All right. Yours is one place where obviously there is no slowdown. In fact, if anything, the graphic on our screen tells us that the average selling price has only increased to almost 2 lakh now, 1.86 lakh. So just wanted your outlook on, same-store sales growth for the next year. You're looking to open almost 60 stores going forward, or rather 60 stores what you have, you're looking to open around 25 stores going forward as well. Your outlook on revenue growth, same-store sales growth, margins and average selling price for the next couple of years?
So we believe that the market will expand at probably around 12 to 13% per year in value terms. We certainly want to beat that with our new stores and our same-store growth. Same-store growth, we reckon that we should be able to clock somewhere around 12 to 13%. And overall growth in the long term, we are aiming at between 20 and 25% CAGR over the next 5 to 10 years. We believe this is eminently possible, and that's going to be the target we're going to do. As I said, margins with operating leverage, it will improve. And now with this agreement, we believe at the gross margin level also over the next 2 to 3 years, we start to see an improvement. So overall, I think in terms of returns on investment, there should be a good improvement.
Okay, just quickly, Mr. Saboo, 2 questions. This store expansion, how is it going to be funded? Is it internal accruals entirely? And 2, that brand that you acquired, Favor Luba, excuse me if I pronounced it wrong, but how is it scaling up? Because you do have some hefty targets in terms of selling watches within that brand in the next few years. How is it scaling up currently?
So let me answer. Favor Luba, you pronounced it perfectly. It's still early days. Favor Luba is a Swiss brand with a fantastic heritage. The new collection is being created by the Favor Luba team in Switzerland. And we believe that we should be ready, the team should be ready to launch the new collection and relaunch the brand in end of August or September. And of course, there will be a period when we will actually check with the market how it is received and so on. But we are confident that with the team that is in place, with the designers and what we've seen so far of it, it looks very exciting. So I think Favor Luba is really on to a good place.
All right. It will be very interesting to see how Favor Luba pans out, largely because Titan was trying to grow it for the longest time, and then you guys had to buy the brand from Titan itself. Remova and the other businesses, how much would they contribute to your revenues going forward, and any other luxury pieces that you're eyeing?
So Remova, we started the first store last year, which was a little behind schedule because the mall launch was a bit delayed. But it's been a cracker of a start. The store is doing very well, and we're sort of hitting targets, and we could do more if we got more merchandise, which we are working on. And of course, the brand is also excited about the performance in India. So we are expecting to open more boutiques in India in the coming years. At the moment, of course, with one boutique, it's not going to really move the overall needle of the company. But over time, when we do more boutiques, 3, 4, 5, I think it will start to do pretty well. The other vertical is, of course, jewelry, Messika. We're looking for a place. We are close to finalizing a place for a boutique. And that's when that vertical in the business is going to start to show up. Other verticals, there is an understanding of the retail consumer. There's nothing immediate that we have on mind. I believe that the focus is on our existing businesses of watches, and we're going to continue that.
Okay, all right, Mr. Saboo, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Ethos. That stock has rallied around 185% from its 52-week low, but has corrected around 14% from its highs. But nonetheless, today it's a little down and out, 2,600 odd rupees for that particular stock. Take a short break, but up next, Sachitanand Uttikar of Trade Bulls will join in with some trading strategies. Stay tuned.